Yo, what is the dealio, y'all? Hey, listen, in this video today, I'm going to be talking about how to manage a trade when you're actually in, all right? When should you get out? When should you get in? But not only get in, but when should you stay in, all right? Because there's a big question like, okay, I took a trade, I'm in a trade. Sometimes I get out too early, sometimes I stay in too late. So when should I get out? So I'm going to break down all of that today in this video, all right? So with that being said, if you're watching this video, be sure to like this channel, okay? Like this video, and will subscribe to the channel and like this video, all right? So I took a play today on MU, all right? It's one of my stocks. Now, it was an ugly play, but we came out on top, right? I made a 7% return on that trade, but I was in this trade a long time. I ain't even gonna lie to you. It was not a pretty trade. I thought it was gonna do what I thought it was gonna do, but it didn't, right? So you got to understand, how do I manage these things when things kind of go awry and they do the opposite of what you was expecting to do based on your analysis, okay? So I took MU. I'm gonna show you the charts and I'm gonna walk you through the whole trade, all right? Now in this trade, I used multiple analysis. I entered in my trade off of the 15-minute time frame, okay? While I was in the trade, while I was managing the trade, I was using a 5-minute time frame, the 30-minute time frame, and then I looked at the hourly a couple times as well. Okay, I am using the 9 EMA, the 21 EMA, the 50 EMA, and also the 200 EMA. Okay, so these are the tools that I was using in order to help me manage this trade, and then I have my levels as well. All right, so I'm just giving you a foundational understanding of what I was doing, so that way you can understand where we're at, and so you understand what I'm actually talking about. All right, so we're gonna go to the charts, and I'm gonna show you how I managed the trade, what I did, why I stayed in, and how I was able to get a profit on the trade. All right, so here we go. So let's go to MU. All right, cool. So right here we got MU, right? So first things first, we got it gapped down, right? So right here we got it closed yesterday at 76.88, and then as you can see, it opened up at 73. So it gapped down about $3, right? So it opened up here, came up, came down, boom, 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 and then this candle opened up, went up, boom, right? So initially it looks like it's a bear, like not a bear flag, but it's going down. It ends up coming up, right? So I ended up taking a entry on my trade right here, okay? So my yellow line is the 50 EMA, okay? I'm gonna do this real quick. My yellow line, I'm gonna do this right here for you. My yellow line is the 50 EMA. Okay? My purple line is the 200 EMA, all right? And then you got my blue line is the 9 EMA, and then my red line is the 21 EMA, okay? Just so you guys know, this is a legend. This is your reference point right here, okay? So when I'm talking about these things, you understand what I'm saying. So those are my EMAs right there, right? Let me turn these off. All right. So, and then also my green line, that is my VWAP, okay? Green equals VWAP. All right. So now that we got that situated, I'm gonna zoom in a little bit. So right now I'm on a 15-minute time frame, right? So MU was coming up, it came up, and then look what happened. It came up to this 50 EMA right here, right? So once it came up here, and then we had this 50 EMA right here, and I saw a little rejection, I was like, okay, on the next candle, it's probably gonna come up and then it'll reject, and then we'll start going down, right? So let's look what happened. I took an entry in right here on this candle, right? So we're going to go in, boom. So I took an entry on this candle right here, on that red candle, okay? Because I saw it starting to reject off the 50 EMA. Took an entry, all right? Now, I went very lightly right here because I said that it could potentially come up here and in here, right? I was thinking right here it could come up and potentially right here, and it came up here later, right? And then if it does fill this full gap, then it could come all the way up to right here, right? Or right here at 76, 87, right? So this is a potential level. On the 15-minute, we got the 200 EMA right here, right? So I took a very light entry right here because I was like, if I could capture this move and it could reject and come down, I could get 10, 15%, okay? So I took my entry right here, and then I was up about 8%, okay? So I'm going to put up 8% right here, but I did not take profit, okay? Because I was expecting it to come a little bit lower, maybe about 12 to 15%, okay? And this is what they mean when they say see profit, take profit, all right? So right here, I was at 8%, but I did not exit my my trade, okay? Then it came back up here above this 50 EMA right here. So I was like, okay, I didn't take profits. I probably should have, but now we're here. And so right here, I was down a couple percent, whatever, 2%. As long as I was at this 50 EMA, I was okay. And then we started coming up. And at the worst, I was down about 17%. But like I say, it was very, very light, okay? The contracts were only $130, no, $150. So I went very light into my position size in this trade. So then I said, hey, if it does come up, I'm going to take an ad. So I waited and I waited. Then I was going between the time frames and I was looking at the 5-minute time frame. And so you see I entered in right here, like it says, but I didn't want to get in. I didn't want to enter in right here. But on the 5-minute time frame, I see that on this purple line, which is the 200 EMA right here, right? The 200 EMA. Let me go back to the 15-minute time frame. The purple line is the 200 EMA, right? Let me make this a little smaller. All right, boom. All right, go back to the 5-minute. Okay, so the purple line is the 200 EMA. So on the 5-minute, I saw that it came up and it rejected, and it was under it. And then it tried to come up and it rejected, tried to come up, rejected, didn't make it quite, tried to come up, rejected again, right? So I saw that it was rejecting off of here. And so I said, I'm getting ready to add. And what I said was, once we can come below the 9 EMA, right? The blue line is the 9 EMA. Once we can close below the 9 EMA, that's going to ensure that we start coming down. Because look, this whole time up here, it was not inside of the 9 EMA, so it was just bouncing off of it going up. The second that it closed inside of the 9 EMA, it started to come down, right? So I said, once we close below here, then we're going to start coming down, right? So I was looking at the 5-minute for that. And then it started to look like this, right? So then I looked at the 30-minute time frame. And so I looked at the 30-minute time frame. And then I had saw this candle right here had closed on the 30-minute time frame, okay? After this uptrend, I saw this candle right here. Once I saw this candle close, that made me add to my position, okay? That made me add to my position. and I added right around like right when it was right under no, it was right above the EMA. It was like right here. Okay. So I added to my position. Okay. Now, my first average was 153 per contract. And then my second average, after I added my contracts, was 145. Okay. So I brought my price down to 145. So if I did get back up to 153, I would have been in the profit at 153 instead of at break even. So I added right here because I saw it was rejecting off of the 200 EMA. It was right above it, but then I saw this candle right here. This let me know on the 30-minute that we was coming down. So I added it to my position right there, right? And then I said, okay, where will I get out at? Once I added to my position, I was down about 13%. And then once I added to my position, I was only down 5.5%, right? So before add, I was negative 14%, 13%, negative 13%, okay? After add, I was negative 5%. Okay. Immediately, like once I bought the contracts, I dropped down to 5%. So I was already better. Right. And then, so that was right here. So then what I did was I said, okay, if we could come down to this 21 EMA, and if we break below that, then that 9 EMA, then I'm cool with that. But this 21 EMA on a 30-minute is like perfect. Okay. If we come to the VWAP, that's even better, right? But we're not gonna be greedy because I was just down. The lowest I was down was 17%. All right. Biggest drawdown during trade was 17%. Okay. I just want to be transparent so you guys could really understand. All right. So I was down 17% at the lowest point. And then I was at 13%. I saw it coming down. So I said, let me add there because it was right around that 200 EMA on a 30-minute time frame. So as you can see, I said I added right here, which coincides, and it's this candle right here, okay? So I added there. And then we got a nice push down. And then I said, okay, we're right at this 50 EMA. Right here, I was hovering at like break even, negative 1%, positive 0.5%, okay? Because I had entered in right here, right below it, okay? So I was right, about break even because I added in a little higher. And then we got this candle, and it opened right at the 50 EMA. And I say, if we can break below this 50 EMA right here, we're going to be good money. It finally started to break. It came up a little bit more. I was still in a position, and then boom, it came down. So I actually took my exit about right here, okay? Took my exit about right there once it had hit that 9 EMA right there, okay? Once it hit that blue line, I took my exit, okay? I'm gonna do this right here. I took my exit on this trade, exit, and it was 7%. Okay? Not 75, 7% in the positive, obviously. Plus 7% profit. Okay? Boom. Now, it did come down a little bit more, then it went up, then it came down a little bit more, and then as you can see, it's going up to most likely fill this gap right here. Or it's going to reject right here and create a double top and then come down, right? But this is how I managed this whole trade. I used the 5-minute, I used the 15-minute, that was my entry and my exit, That was my main analysis. And then I was using the 30-minute as well, right? The 30-minute let me know that it was going to come down because we had this candle. So it was going to be a decent move because it's on the 30-minute time frame. And I'm seeing this right here after an uptrend, indecision, and it's a red candle. So sellers were there. And then it came up, wicked up, rejected, and boom. And it was hovering around that 200 EMA. So it started to stall around a 200 EMA on the 30-minute time frame. So I was like, all right, perfect. We're going to get our move here. And then I didn't waste any time and I got out. Right? Now, if I would have just entered in right here, then obviously I would have probably made about 12, 15% on this trade. But this is what I'm saying when I'm talking about managing your trade, right? I was up 8% within the first couple minutes. I did not take that because I thought it was going to be bigger. And then I ended up being at 0%, negative 5%. So I was holding. So I had to hold through that drawdown right here, negative 17%. But initially I went in light anyway. So even though I was down 17%, it wasn't a lot of money. I wasn't really stressed at all. And then when I added in, I dropped my percentage down to negative 5 from negative 13. I was able to get this move right here. My biggest drawdown was negative 17%, and I exited at 7% profit. Okay. And I was in this trade for, I entered in on this candle right here, So that's 15, 30, 45, hold on, 15, 30, 45, an hour 15, an hour 30, and then hour 45. So almost 2 hours I was in this trade, and that was a 7% trade. It was still a profit. Okay, so this is what I mean when I say it wasn't the prettiest trade, it wasn't the sexiest trade, but we ended up in profit, and we properly managed our risk, and we properly managed the trade. All right, so that's what we did. That's how we did that one today. Not every day is gonna be a breakout day, and you gonna make 100% on every single trade. Some days you're gonna have to work for your money, right? Some days you're gonna be in and out in 20 minutes. Some days you're gonna be making 50% in 3 minutes. But some days, this is where your skill set is gonna come into play, right? This is what I mean when I say the more you study, the less you worry. Because a lot of times you get out of trades because you're either afraid or you're not honoring the levels, but also you just get exhausted of being in a trade a long time. So trading takes up a lot of your mental space, right? And that's why I wanted to make this video to really, let you guys know how to manage a trade. When a trade does the opposite of what your analysis says, it doesn't mean that it's a bad trade. You got to really start to learn how to think and use your brain and, figure out, how do I do this? And that's why traders are some of the highest paid people, because this skill set and learning how to think in this manner, in this way, is not easy. Okay? It is human nature to want to run away from discomfort, right? And this could be a very uncomfortable situation, and that's why you want to manage your risk properly, not oversize on your positions and stuff like that, so you can think clearly and be able to do what you know you need to do. All right? And always remember, any trade can go the opposite way, no matter what, no matter how beautiful the setup looks. Okay? But there was a lot of traps today. There's a lot of traps every single day. But that's how we manage that trade, and I hope that you got a lot of value from this video, all right? So like I always say, make sure you get out of your head, go get into this world, because your head is a dangerous place to live, all right? And also remember, the more you study, the less you worry, all right? I'm going to see you guys on the next video. Peace.